People don't understand their natural advantages, and they don't use them. That's bad, number one. But worse, number two, if you don't think you're a good ice skater, or if you're convinced you're not a good cellist, you're not going out and try it. But people are buying stocks anyway. They're not discouraged. They just think it's a gamble.
We begin with
cryptocurrency. You've heard the word, seen the headlines, maybe even watched a few friends get rich or go broke. But what exactly is crypto? Let's break it down in simple terms. At its core, cryptocurrency is a digital form of money. Unlike traditional currency like the dollar or rupee, it doesn't exist in physical form, no coins, no notes, it's all online. But here's the twist, it's decentralized. That means no single government or bank controls it. Instead, crypto runs on blockchain technology, a public ledger that records every transaction and is nearly impossible to hack or change. Think of it like this, if you send money to a friend through a bank app, that transaction is controlled and recorded by the bank. But in crypto, that transaction is verified by a global network of computers. No middlemen, no delays. This system makes crypto borderless, fast, and transparent. Bitcoin was the first cryptocurrency, launched in 2009 by an unknown figure using the name Satoshi Nakamoto. Since then, thousands of other cryptocurrencies have emerged, each with different use cases, values, and communities behind them. But what makes people trust crypto if it's not backed by any government? The answer lies in technology and scarcity. For example, Bitcoin has a limited supply of 21 million coins. No one can create more. This limited nature makes it similar to gold, which is why Bitcoin is often called digital gold. How it works now that you know what cryptocurrency is, let's talk about how it actually works. Because it's not just magic internet money. Every cryptocurrency transaction is powered by a special technology called the blockchain. Imagine a giant digital notebook that's shared with millions of people around the world. Every time someone sends or receives crypto, the transaction gets written in this notebook. And once it's written, it can't be erased or changed. That's what makes blockchain secure and transparent. Not banks or governments. Instead, it's miners or validators, regular people with powerful computers. They use these computers to solve complex puzzles that help confirm each transaction. Once verified, the transaction is added to a block, and that block is linked to the one before it, forming a chain. Hence the name blockchain. There are two main ways to verify transactions: proof of works, POW, used by Bitcoin. It requires miners to compete in solving puzzles, which consumes a lot of electricity. Proof of stakes, POS, used by newer coins like Ethereum 2.0. It's faster and eco-friendly, where people stake their coins to help verify and earn rewards. Once verified, your crypto gets transferred almost instantly. No need for banks, no third-party fees, and no delays. You store your crypto in a digital wallet, which can be a mobile app, software, or even a physical device called a hardware wallet. Cryptocurrency works through a global, decentralized network that runs 24/7, giving you full control over your money, but also full responsibility. There's no forgot password or call support if you lose your access. Understanding how it works is key before putting your money on the line. Types available. When people say crypto, they usually think of Bitcoin. But the world of cryptocurrency is much bigger than just one coin. There are thousands of cryptocurrencies, each with its own purpose, technology, and value. Let's look at some of the main types you need to know before investing. Bitcoin, BTC, the original and most well-known cryptocurrency. It was created as a digital alternative to cash and is often seen as a store of value, like digital gold. Bitcoin is limited to 21 million coins, making it rare and highly sought after. Ethereum, ETH, the second largest crypto by market cap. Ethereum isn't just money. It's a platform for building decentralized apps called dApps. It introduced smart contracts, which are digital agreements that run automatically when conditions are met. Stablecoins, these are cryptos like USDT's Tethered, USDC, or DAI, which are tied to real-world currencies like the US dollar. They don't fluctuate like Bitcoin or Ethereum and are used for safe trading, storing value, or avoiding market volatility. Altcoins, this refers to all other cryptocurrencies besides Bitcoin. Examples include Cardano, ADA, Solana, Sisal, Polygon, Metis, and Chainlink's Unkay. Each offers different features, faster transactions, lower fees, eco-friendly networks, etc. Meme coins, these started as jokes but gained serious popularity due to social media hype. Dogecoin, Doge, and Shiba Inu are popular examples. They're high risk, high reward, and often influenced by celebrities like Elon Musk. Utility tokens, these are used inside specific platforms or ecosystems. For example, BNB's Binance Coin is used to pay lower fees on the Binance exchange. Each crypto has its own goal, community, and use case. Some aim to change how finance works, others how we use the internet, and some just ride the hype wave. Before investing, it's important to understand what you're buying. Not all coins are created equal. Risks involved. Before you invest a single rupee in crypto, you need to understand one thing clearly: this market is risky, and it's not for the faint-hearted. The biggest risk in crypto is volatility. Prices can rise or crash by 20%, 30%, even 50%, sometimes in just a few hours. One tweet, one news headline, or one government policy can send the market into chaos. You could double your money one week and lose it all the next. Then there's the issue of security. If you lose access to your digital wallet or fall for a phishing scam, your crypto is gone, permanently. There's no bank, no helpline, and no way to reverse transactions. And while blockchain is secure, hackers still target exchanges, apps, and careless users. Another major risk is regulation. In many countries, crypto rules are still unclear or constantly changing. Governments can ban exchanges, restrict withdrawals, or heavily tax profits. And this uncertainty can crash the market or freeze your funds. Let's not forget about scams and rug pulls. New projects often pop up promising huge returns, only to disappear overnight with investors' money. Fake coins, Ponzi schemes, and pump and dump groups are everywhere. If something sounds too good to be true, it probably is. Also, crypto is uninsured and unprotected. If an exchange goes bankrupt or shuts down, there's no guarantee you'll get your money back, unlike with traditional banks. Finally, there's the risk of emotional investing. FOMO, fear of missing out, can push people to buy at the top, and panic can make them sell at a loss. Without a solid plan, emotion can destroy your portfolio faster than any market crash. Smart investing, so you're ready to invest in crypto. But how do you do it wisely without getting burned? That's where smart investing comes in. Let's break it down. First, start small. Don't jump in with your life savings. Begin with an amount you're comfortable losing. Crypto is a high-risk asset class, and even experts make mistakes. Think of it like testing the water before diving in. Second, do your research, do YOR. Never invest in a coin just because it's trending on Twitter or recommended by a friend. Understand the project's purpose, the team behind it, tokenomics, use case, and whether it solves a real-world problem. Reading white papers and checking roadmaps can give you insight into a coin's potential. Third, use reputable platforms. Always trade or buy on well-known exchanges like Binance, Coinbase, or Kraken. These platforms offer stronger security, better liquidity, and customer support. Avoid shady apps or offers that ask for upfront deposits or personal keys. Next, diversify your portfolio. Don't put all your money into one coin, especially not a meme coin. A balanced mix of Bitcoin, Ethereum, stablecoins, and some promising altcoins can help reduce risk while maintaining growth potential. Also, consider storing your crypto safely. Use a hardware wallet or secure software wallet for long-term holdings instead of leaving them on exchanges. Not your keys, not your coins, is a rule every smart investor lives by. Crypto isn't just a trend, it's a financial revolution. Are you ready or still on the fence? Hit that subscribe button and tell us, what's stopping you from investing in crypto today? Don't miss our next video, The Gig Economy, Turning Side Hustles into Full-Time Income, coming soon!